The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It is Charles, Michael, and Thomas with you today, and what a special day it is that we get to broadcast this show, in that today is when America, the United States of America specifically, we're going to be bumping up against that debt ceiling limit. And so that means that for the next 5 months or so, the Treasury Department is going to be employing extraordinary measures in order to prevent the United States from not being able to pay obligations that have already been agreed to be paid by Congress.
One of the lesser understood aspects of how we run our government here, so I do think we should spend a little bit of time on it.
We can get into some plumbing.
I don't think this means that Janet Yellen's running around wearing a cape or anything like that. That's not the extraordinary measures that we are talking about. But
politicians in capes.
Let's get into what exactly the extraordinary measures mean, because I think everybody knows we have a whole bunch of debt, and in fact that level of outstanding United States government debt ballooned over the last couple of years by, what do we estimate, $8 trillion over the last 2.5, 3 years?
Yeah, in that ballpark.
Yeah.
Somewhere in that ballpark. So here is what happens, okay? There are a few different levers that Janet Yellen can pull, because the Treasury Department ultimately is who controls spending, not controls spending, but who processes spending from the federal government. They're the ones who take in the tax receipts. So if you ever have to make a payment for your taxes, either end of the year estimated taxes, you write your check not to the United States Congress, but to the United States Treasury, okay? Likewise, when you have debt that is issued by the United States, it's the Treasury Department who does that as well when they need to borrow. And so it's not as if the Treasury exists just as one giant bank account where it's, hey, like, this is all just sitting in here, and it's kind of equivalent to if you run your household and you have a fund for your retirement accounts and a fund for your emergency fund and a fund for the car that you've been saving up for. You might have different accounts for different purposes, and the Treasury Department is no different in that respect. And so basically what the Treasury Department does is, first and foremost, they say, okay, what are the things that we don't need to put money into now that once that limit is raised eventually, because again it will be eventually, it's just a matter of when.
Sure.
Okay. What are the things that we don't need to pay right now that we can pay a month, 2 months, or 6 months, or whenever from now, because they don't make a difference to today's, business? Those things do not include interest on Treasury bonds. So for example, if you have a Treasury bond that's paying interest next week, Janet Yellen's not going to say, gee, I'm not going to pay that, because that would represent a default on said Treasury bond, which would be bad.
Why would that be bad?
Well, because the U.S. government is widely viewed to be the most credit-worthy entity on the face of the planet. It is the, quote, risk-free rate, in that, hey, investors know that if they put a dollar in to something that the U.S. government, is offering as an investment, that dollar is going to be paid back, because the U.S. government always pays its debts.
And if they didn't,
then we would
It would shake the very foundations of the entire financial system across the world.
The whole financial system is basically built on the idea that even if you have significant inflation and potentially a devaluation of the U.S. dollar, the idea is, hey, if you're supposed to be paid $1 back by the U.S. government, they're going to pay you that dollar regardless of how its value has fluctuated.
So, I mean, practical implications here would be, the idea of FDIC insurance, the idea of money in your bank account actually being insured against this type of total default risk. All of that would be shaken to its core if the United States decided, hey, we're just not going to make a payment on one of our Treasury debt obligations.
Yes. So instead, what the Treasury Department does is they say, you know what? The Civil Service Retirement Fund. Yes, we need to contribute that money for folks that are going to be retiring a long way down the line. But ultimately, nothing really happens if we just delay that payment for 3 months, and so we're going to delay those payments. Okay? The Thrift Savings Plan, okay, has different investments in them. One of them is the G Fund, just as an example, which is
the Thrift Savings Plan is the retirement pension plan for government workers.
Correct. Okay. One of the funds in there is comprised of government securities. The Treasury might say, look, we know we're going to be able to do this, but we're just not going to put the money in there right now because we can put it in 3 months, and no one's going to be harmed by this.
You're quite literally robbing Peter to pay Paul here.
Yes. Okay. Other things that they do. There's also an account at the Treasury called the Treasury General Account, which is pretty much, hey, this is money that we've already borrowed but have not yet spent. And so they start spending that down at a more rapid rate because they have X billion number of dollars sitting in the account that, they like to keep a cushion, just like every household likes to keep a little cushion in their bank account so that if, an emergency happens, they don't necessarily have to issue debt, but they start spending that down as well. So these are the things when we talk about extraordinary measures. It's not Janet Yellen running around in a cape with fire extinguisher saying, extraordinary measures, that's not what it is, We could all see Michael Scott doing that, but Janet Yellen does not do
Generally
that.
does not.
Okay. Instead, it's, hey, what accounts what bills do I not need to pay now that I can pay later when there's a better time to equate it to what a household does. Now, ultimately, okay, we've come up to the debt ceiling a few times in the last couple decades or so where it's been contentious. For the most part, debt ceiling, by the way, it's been around since 1917. Prior to that, it did not exist in the United States. The reason it was put into place was because previously the Treasury, each and every time they wanted to borrow, had to go to the Congress and say, hey, you've asked us to, borrow these funds, but we need to confirm that it's okay for us to do so, and that was kind of a pain. So rather than having to go every time that the Treasury needed to borrow money, they said, can you just authorize us up to a certain limit? It's basically, hey, Chase Bank, can you give me X credit limit on my credit card so I don't have to ask you every time I make a purchase? And so that's where the debt ceiling first came into place. Now, most countries in the world don't have one of these, okay?
We're special.
Again, most countries do not have one of these. In fact, the only major country that does, I believe, is either Denmark or the Netherlands.
Has a debt ceiling too? Okay.
Correct, okay? But it's so far above what they actually spend that it never comes into play. It's set at like a ridiculous level, so it's a non-factor. So it's not really something that most countries have. So the reason why I often say that it is the dumbest part of law anywhere is because Congress has already authorized the appropriations for this year. They signed the big omnibus bill back in December. Whether you like it, hate it, or are ambivalent about it, they said, this is what we're going to spend this year. The debt ceiling says, hey, even though you've said you're going to spend this much, we're not going to let you actually spend this much. The equivalent is, let's say that, Mike, you went out and you bought a house, okay, and you took out a mortgage in order to do so. And you said, okay, great, I have to pay that mortgage every month. And your bank, even though you have the ability to pay this, you get to April, and the bank says, hey, even though you've got money in your account, we're not going to let you pay that because we don't want you paying any more than what we've authorized for you. And you're like, but I qualified for the mortgage. I have to make... No, sorry, you can't do that. But I have the money. What? Sorry, you can't do that. So this is where you run into the problem where Congress is simultaneously told the Treasury Department, yes, this is how much you are authorized to borrow for this year, but no, you can't borrow that much. So if you want to have a conversation about spending levels, the place to do that is in the appropriations bill, the budget for each year, where you say, great, we want to spend less. Not, hey, we're up against the debt ceiling, and now the full faith and credit of the United States government is being threatened because we are simultaneously being told to borrow and that you're not allowed to borrow.
Yeah, it's not much more than a gimmick to get the national debt in front of people's eyes. I think that's really what it comes down to, is a bit of a gimmick that is implemented quite poorly because of how catastrophic it would be if it would actually ever defaulted on. And yeah, I mean, I keep going back to the same story here. You know, we're not going to raise the debt limit unless, President Biden agrees to deep cuts in federal. Well, for him to agree to deep cuts in federal spending, you need to pass a bill.
Yep.
You have to pass a bill that's going to make those deep cuts to federal spending. I agree. Joe Biden's going to veto that bill, and it's likely not even going to make it to the Senate floor.
Okay, depending on what deal gets negotiated between the House and the Senate, there may be something where they say, yeah, we agree to cut X, Y, and Z. I don't think that's the most likely thing right off the bat, but it's possible in theory.
But rather than talking about this as, hey, we have this magic tool to cut spending, no, you don't. In order to do that, you have to pass a bill.
If you actually want to cut spending, the better way to go about it in the less destructive way is actually through a government shutdown. I mean, I know that, again, that because ultimately a
rather
government
than defaulting on your debt,
government shutdown is hugely inconvenient, but it doesn't threaten the overall stability of the world financial system.
Yeah.
We know this because we've been through a number of government shutdowns. And by the way, they all get resolved as well. Okay? Here's the one thing that I think you can say with certainty is that the U.S. government is not going to be perpetually prevented from spending money that it needs to spend. At some point, they're going to have to do so. It's just a matter of, do things get a little bit nasty in the process here? So, again, we've got 4 or 5 months before those extraordinary measures run out. Unfortunately, we're probably going to be talking about this more than I would like to because everyone loves to freak out about the debt ceiling, even though every single time it's come up in the past, it's been a whole lot of hullabaloo about nothing. This time could be different just because you have a...
Well, every time could always be different.
No, but this one in particular could be different because it did take Congress 15 tries to elect a speaker this year, which is not normally the case for a majority. So the question is, hey, do you have the ability to actually get a package together that would be agreeable to all of Congress? It's a real question as to what it looks like. But again, the most likely outcome is still that the debt ceiling ends up getting raised without causing any major problems. But there is the possibility that things get a little ugly for a little bit.
And the reality, too, is that actually cutting the spending, the reason it's so difficult is because the areas that would actually make a difference are really tough to cut. They're defense, Social Security, and Medicare.
Who wants to cut those?
Good luck. You can cut everything else, and you're still going to have a massive
Isn't
deficit,
everything else only like
problem.
25% of the budget?
I don't know the exact figures, but I'm looking at a chart here that's a few years old here, and it looks like 13% to defense. No, that can't be right.
I think discretionary non-defense spending is only like 20 to 30% of the federal budget. Most of it is all the stuff that is
and I'm not
kind
saying
of
we
important.
shouldn't fix some of that stuff like Social Security and Medicare.
No, we've talked about how to
should
fix
attack
Social
it,
Security.
but nobody likes to tackle it.
No one wants to. We've talked about this for a while. Quick break here. When we come back, let's talk about...
Let's talk about the Beige book. There are some interesting
the Beige book. Not to be
conversations.
confused with the Tan book, but the Beige book we'll be talking about right after this.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand brand new guide called Can You Afford to Snowbird? You can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird? And it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk, but at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators, 866-848-5699. Or if you prefer, you can simply go to their website, LegalExchangeShow.com, and request it there.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
Mike, how often do you read the Beige book?
Unfortunately, about every 6 weeks.
Yeah. 8 times a year, the Federal Reserve publishes their Beige book, named because it's beige. And it's pretty much their commentary on the state of the economy that goes beyond just, hey, this is what we're doing. It's much more, hey, here's what we've been hearing from businesses. Here's what we're seeing on a, more descriptive basis in the economy.
Yeah, they employ a massive number of economists, and each of these local or regional Federal Reserve banks will go out to businesses and ask them, what are you seeing? What do we find indicative of this economy and how it's reacting to what we are doing right now? When the Fed's not doing anything, this stuff is a little bit more boring. When a lot of people are projecting that we're heading into recession, I do find it pretty interesting.
So the two big numbers that obviously we're always concerned about with the economy, growth and inflation. How much you grown by and how much a price is going up by. So this year, let's start first on the growth side of things. You've got businesses saying that they're expecting a little bit of a pullback in consumer spending in the coming months here.
Yeah, very few of them spoke to actually having seen it yet. But, they did say many businesses point to the fact that they're finding it more difficult to pass higher cost to consumers, that they're being more price sensitive today than they were a year ago. I think that lines up with what we're seeing.
It does. Now, that suggests a couple things. A, if business customers are being more sensitive to price issues, either A, you're going to have margins compressing because input costs are still rising in a lot of cases, okay? And so that is something that, you do have to look at. And remember, input costs, we're not just talking about, your hard materials, your wood, your copper, your steel, your things like that. Remember, a bunch of states passed minimum wage increases that went into effect January 1 of this year. If you are a business that employs people at or near minimum wage, you've got, your input costs going up because your labor costs rose. So these are the things that you watch for and, potentially have some margin compression.
Services inflation has been a big piece that we've been looking at. I found this commentary from Boston, Philadelphia to be a little bit contradictory, but interesting. So in the Boston Fed's case, they had a quote saying that inflation could crimp leisure spending in 2023, but none of those companies had seen any actual signs of a slowdown yet. Tourism businesses in Philadelphia, however, said that they'd already noticed demand for lodging beginning to fall in that region.
Well, yeah, it's winter in Philadelphia. I don't want to go there then either, I mean, what are we doing here,
Poconos on New Year's Eve was pretty nice, Chuck, I'll tell you that. That's where I was for New Year's Eve.
Is that near Philly?
No. But I mean, it's the Philadelphia Fed. They're not just talking to people
they're not
in
just
downtown
talking about.
Philly.
They're not just talking to the guy at the steak store. Okay, I got
Correct.
it. So yeah, businesses expecting a pullback but haven't seen it yet. And this matches just, by the way, what I've heard anecdotally in a number of different businesses. The auto business has had a little bit of a rebound in January after a really tough end to 2022. On the travel side, you're still seeing things moving along pretty robustly there. You take a look at what we're seeing through TSA checkpoints, just as an example. When's the last time you took a look at these, Mike?
No, it's been, maybe Thanksgiving, yeah.
Been a little while?
Yeah.
So here's what we're seeing right now. And again, just your comparable numbers. If you go back and look for the last week, okay, compared to 2019 pre-pandemic levels, TSA throughput's basically equivalent. Pretty much at pre-pandemic levels. So there's no slowdown happening on the travel side. In fact, it's still accelerating upward now. We've seen upward movement for TSA throughput each of the last 2 years now, obviously coming off of very low numbers in late 2020 and most of 2021. So
I'll tell you, I'd be pretty nervous if I were those airlines, though, because that's all been made up by leisure travel. The business travel is still not back to pre-pandemic levels.
No, and especially if you do have businesses that are now in cost-cutting mode, that business travel is not coming back over the next year or two either.
The additional commentary that I found interesting just real quickly here was that there were more than one quote talking about the labor market and how companies were still either having a tough time hiring, offering bonuses, or hesitant to lay off employees in spite of the fact that they are facing tight margins.
Yeah, it's... Why don't we... I want to take a quick break here, but when we come back, we've got Wall Street Watch, and then I want to touch a little bit more on the tightness in the labor market before we go any further.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird? You can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird? And it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Can You Afford to Snowbird? Mike, there's a big list of different costs people have to account for if they're deciding to move to a second place for the winter. What types of things are on that list?
Yeah, certainly are. I mean, first and foremost are the obvious ones. The actual cost to go rent a place or own a second home and maintain that place throughout the year are going to be substantial, especially if you're going to a popular place during a popular period of time. If you're going to Florida from January through March, that's going to be a lot more expensive than snowbirding in Minnesota. I actually have somebody I know who spends half the year in Alaska, half the year in Minnesota. The other big considerations, though, when you are going down there, what type of vacation is this for you? A lot of people, when they go on a true vacation, they're dining out every night. If you're renting a place with a full kitchen, that might not be the case, and you could find some discounts there. Transportation, once you're in that location. Am I driving down? Am I renting a vehicle the entire time? And then what's it actually going to cost to maintain my primary residence while I am not there?
You can't just turn the heat off in the winter up here.
You cannot up here. And so you might be paying somebody to stop by the house on an occasional basis. The cost of plowing if you're not there to remove the snow on your own. So there are a lot of things that go into this that are just above and beyond the simple, can I afford the rental payment?
Our guide is titled Can You Afford to Snowbird? And there are two different ways that you can request it. First, you can call 800-393-4001. Second option, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, the sell-off is extending for a second straight session today as traders absorb a mixed batch of fourth quarter earnings and new economic data throughout this week. Right now, the Dow is off by 0.2%, or 213 points. S&P 500 is off by 0.75%, or 29 points. And the tech-heavy NASDAQ down by 1%, or 106 points. Russell 2000 also off by 1% so far today. 10-year Treasury yield is up by 2 basis points, now at 3.40%. And crude oil is ticking higher, trading at $80.05 a barrel. Procter & Gamble reported mixed quarterly results ahead of the opening bell and revealed year-over-year declines in revenue and profit as higher prices struggled to offset declining sales volumes. The consumer giant's net sales for the 3-month period ending December 31st fell 1% to $20.77 billion, slightly above forecasts of $20.73 billion. The maker of brands like Crest toothpaste, Tide laundry detergent, and Pampers diapers lowered its guidance and did caution of a $3.9 billion hit to its fiscal year 2023, citing unfavorable foreign exchange rates and more expensive raw materials, commodities, and freight. That stock off by 1% today. Meanwhile, Alcoa's stock is down by 3%. After the aluminum producer reported a 20% decline in revenue for the fourth quarter, noting challenging market conditions and lower aluminum prices, in addition to higher costs for energy and raw materials. The company's sales sunk to $2.66 billion from $3.34 billion. And Amazon announced it will close its charity donation program, Amazon Smile, in a cost-cutting initiative by February 20th. The program entailed the e-commerce giant donating a percentage of eligible purchases on its site to the shopper's selected charity. Amazon said it has donated about $500 million to charities since that program's launch in 2013, and Amazon stock is off by 1.5% so far today. I'm Tucker Sullivan. That's Wall Street Watch.
Mike, I have a question for you.
Please.
Do you know what the United States population was in 1950?
200 million.
148 million.
Okay.
Okay. For the next 15 years, what do you think the average population growth rate was in terms of percentage added to that each year?
Sorry, 1950 through the next 15?
Through 65.
6.
6% a year?
Yeah.
1.5% a year.
Close.
Okay. Very, very close. The 6% a year would have meant that we'd already be at 330 million by then, but that's okay.
Made sense.
So, for what we often refer to as one of the golden ages of the U.S. economy, that 50s into early 60s period, the U.S. population was growing at around 1.5 to 1.75% a year. Okay, that's what you saw. As we started to see, the baby boom end and started to move into kind of that next generation being born, you saw a downshift where we went from, that range to somewhere in the range of around 1 to 1.25% a year. And that's basically where population growth was until 2002. Since 2002, the United States has only had 1 year in which population growth has topped 1%. Okay? Other than that, it's basically been anywhere from 0.75% all the way down to, even in 2019 before the pandemic, only 0.2% growth. Okay? So, when we look at this and what it means for the labor market, okay, remember, GDP is all about how many hours are you working and how productive are you in those hours. What kind of stuff are you actually making there? Okay? One of the real limits on GDP growth is low population growth. Because if the hours worked side of the ledger is only moving up very, very slowly, then you got to rely entirely on productivity to actually grow GDP, and that's really hard to do. Productivity growth doesn't really move that much these days, okay? You're talking 0.5% to 1.5% depending on the year generally.
And I think generally this trend in productivity growth has been spikes of, based on a certain period of time or a new innovation or things along those lines, and then a cooling off period.
Yeah.
Generally speaking.
Hey,
it's pretty randomized.
Eli Whitney invents the cotton gin. All of a sudden you got productivity growth, okay? But it's already been invented now, so that productivity is in the past, and I don't know anyone who uses a cotton gin today, but that's just me. Where I'm going with this, when we talk about the labor market and how it, we're not really seeing any signs of looseness, think about it in terms of GDP. If GDP is still growing, and it's growing faster than this now, but even if you slow down to like 2 to 2.5% GDP growth, if population's only growing by 0.5% a year, there still is going to be no slack in the labor market that's generated, because you're basically taking all those people and saying, hey, in order to produce this, we got to throw all these people into jobs and have productivity growth of 2% to get there. Mm-hmm. Really, really hard to generate slack in an economy that's growing slowly if there's any kind of positive GDP growth. And this is why, especially in today's world, if you actually want slack in the labor market, which I'm not saying that I do, but I'm saying that's what the Fed is gunning for.
Yeah, they want it.
Because that's their prescription. Then you can't just say, oh, gee, we're going to have this soft landing and slow GDP growth to 1 to 2%, and that should generate the slack we need. It won't, because the population's growing so slowly. You basically need negative GDP growth or an economic contraction or a recession, however you want to call it. You need that in order to get the slack in the labor market that the Fed wants.
Or, like you mentioned, a massive change in productivity. But, like, show me the magic that's going to create that.
Right. Like, I don't know what actually does that. Maybe it's ChatGPT. Maybe all of the AI stuff is finally, going to prove itself. But I'm not 100% convinced yet.
Yeah. And, look, the continued surveys that we keep hearing, look, I know, when Microsoft announces big layoffs, it gets people shaken up and scared, but we still have not seen compelling evidence that the labor market is actually loosening.
No.
And the Beige book, the numbers confirm that in the unemployment rate and the jobs reports that we get, and then the commentary from employers also confirms the same thing, which is they are very hesitant to slow down hiring, lay people off, or do anything there because it's been so difficult to find workers over the last few years.
Yeah, and so, look, there's been some slack that's developed in the tech labor market, certainly, but it's also not like there's a ton there. I still know plenty of tech companies that are hiring today because they're saying, hey, there's a bunch of good talent that's being laid off. This is a great opportunity for us to pick up new people.
Yep.
And you talk to basically anyone outside of tech or the real estate industry, like the actual, like the financial side of it, brokers and mortgage originators and things like that. There's no damage to the economy outside of those two areas right now.
Right.
That's where it's concentrated. Will it stay there is the question, and I am unconvinced that it'll stay there. I do still think that a recession is a very, very good possibility this year, but to this point, there has not been any labor damage outside of tech and the financial side of the real estate business.
Yeah. It is what it is right now, and we can talk about how restrictive things are, but we are just not seeing that slack in the labor force, and it's admittedly going to be tough to get inflation down further, right? We have seen inflation come down rapidly over the last 6 months, largely due to oil price changes. It's going to be difficult to see it come down further without that slack occurring in the labor market.
You ever watch the scenes from Davos on the Bloomberg or the CNBC?
Always.
It's very picturesque.
Yeah.
Right? You always have the snow-capped...
That's why it's in Davos and not Gary, Indiana.
Well, here's where... Do you think that they, like, snow make in order to get the right amount of snow on the trees in the background? Or is it just always that perfect with, like, just the right amount of snow behind them? See, you don't get that in New England. New England, you get, oh, the snow's on it for one day, and then it melts and turns to sludge.
Yeah, I don't have the answer for you.
You know where they should host this? You do need a different backdrop occasionally. Like, put it in, like, the Gobi Desert one year or something like that. Just sand dunes as far as the eye can see.
Didn't we try that with the World Cup and didn't really go terribly well?
Well, to be fair, you had the best World Cup final that we've ever seen.
That's true. Yeah.
Okay.
That's true.
But the
you
path
couldn't drink beer, but it was a really good
And the
final.
path to get there was rife with just horrible human rights
Slavery.
abuses and things like that.
Yeah.
So
Maybe keep it in Davos.
On a net basis, maybe we shouldn't be doing that, the big events, in those kinds of environments. Speaking of the labor market, Harvard is conducting a scavenger hunt. They're looking for 2.6 million people who have dropped out of the labor market and trying to figure out what's the deal. Why have they not come back? Now, the overall number of people that are working right now is still higher than it was before the pandemic, but you've got a bunch of people that dropped out and didn't come back, and Harvard economists are looking around saying, gee, what's the deal with this?
Yeah, so what we're talking about here is the fact that the trend line, had it continued where we were pre-pandemic to today, there should be another 2.6 million people out there either working or looking for a job, and they don't seem to be in this labor force right now. So what the heck, what's going on? Raw numbers, yeah, there's more jobs filled today than pre-pandemic, but the economy, the population has grown over that period of time, so you would expect more people there.
Yeah.
They're not. The general conclusion from Harvard economists seems to be that the U.S. is missing about a fifth of its pre-pandemic low-income workforce. So very early on in the pandemic, those are the jobs that disappeared, right? If you were working at a hotel, at a restaurant, as a bus driver, those jobs disappeared. They were laid off by and large. And while we have heard about a lot of those jobs coming back, clearly it's been the tightest area of the labor market, and some of them haven't. Some 13.5%, they estimate, of the poorest quarter of the workforce is below pre-pandemic levels.
Which, again, so there's some different data that we've gotten from different sources. I forget which Fed branch it was. Maybe it was the San Francisco Fed that came out with a report, I think it was a week or two ago, that specifically said, hey, at this point, based on the data we have, we think that retirements are the major contributor to people that have dropped out. Now, here's the thing. With those workers that are earning the lowest amount, it is possible that some of those could be retirees because they're working a day or two a week, just, low income, low stress jobs. And so that could match that up. But also when you think about low income jobs, you're often thinking about entry level jobs, someone just starting out who might be in their teens or early 20s. And if that person is dropping out of the labor force, that is a far bigger concern.
Agreed. Yeah, if we're looking at, to your point, Chuck, where does we seem to be having some of these problems? If we take a look at December 2022, the labor force participation rate for those who are over 55 years old, 38.8%.
Okay.
December of 2020, December of 2019 is where we would want to be there if we're taking a look at pre-pandemic. We were sitting at 40.3%.
Okay.
So that seems to back up your point here. Look, there's nearly a 2% total drop in the labor force, 1.5% total drop, I guess, in that case.
Yep.
In the labor force participation rate on those over the age of 55. I do not believe we are seeing that across every age group.
No, if you look at like prime age and what we're seeing there, you're flying at that point. So it does suggest that my running assumption at this point is that most of the people that have dropped out are in their 60s or 70s and were working part-time jobs and have not gone back to fill those. That's where I think the bulk of them are at this point. Wasn't the case for the last 2 years, but now that's where I think we are. Quick break here. When we come back, we are talking about Fed members giving their thoughts on future interest rate changes.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange has a brand new text code. Text us at 617-362-1385 and keep on top of breaking business news all day long. This is the Financial Exchange Radio Network.
All right, so we've got a couple different Fed voters who have come out in the last couple days and said, look, we think we should probably be moving to 0.25% rate hikes rather than the 50 basis point that they did at their last meeting and the 75 they were doing for a few of the meetings in 2022. And what we're seeing right now in terms of how the Fed funds futures market is projecting things for the February 1st meeting, so less than 2 weeks away, 95.2% chance that we only get a 0.25% increase.
Yeah. I guess I have a question for you. The Fed is not going to be thinking this way, but if we take a look at, we've talked about this at length, right? The last 6 months, you have seen a significant slowdown in the pace of inflation.
Yes.
So if we're taking a look at headline inflation numbers month over the last 6 months, so July through December, we averaged
0.16%.
Yeah.
Yeah. This is what I'm saying. The inflation picture is really good for the last 6 months.
Core inflation averaged still
0.3.
higher, 0.3, 0.4. In both cases, we are now looking at either headline inflation, which I'm going to discount because, look, oil prices came down so rapidly. But on headline inflation numbers, we have exceeded the Taylor rule, right? Taylor rule says you need Fed funds rate higher than the rate of inflation in order to control inflation.
But it's annual.
I understand.
We can't.
I know we can't just...
We can't get rid of 6 months in a year and call it a year.
Agreed. But the pace that we are making is
good.
Looking like we are going to be coming out of it. Even if you look at core inflation, right? That annualized is coming in at 4.5% core inflation. Both of those numbers are pretty close to restrictive territory should they continue. And the core, the headline, I'm going to discount. But the core, I look at and say, look, that should actually be indicative of something in the future, right? If you're seeing core prices coming down, they are more predictable than what's going to happen next week with food prices or oil prices.
Yes. Now, the counterpoint to all this is that inflation has been happening with oil prices falling significantly. And I don't think you can expect oil prices to fall 6% a month for the next 6 months because that would get us to $2 a gas gallon, $2 a gallon gas.
Which is why I'm more interested in the price changes that exclude things like oil.
Well, so here's the thing. Oil does filter into those other areas,
It does.
though. Okay?
Yeah.
And it filters in indirect ways. Hey, if you're a landlord and all of a sudden your heating oil bill is up, you're going to raise your rent.
Yeah.
Okay, like these are things that happen, and we'll talk about some of the ridiculous utility bills that we've been seeing. I got mine yesterday.
Yeah.
And I was like, oh,
Not pretty.
We're not turning the Christmas lights on next year. We're going full Scrooge.
That was
on
a
it,
mistake.
I think. Like that's gee.
So you're down to 2 trees next year is what you're trying to say.
Tucker, with how high the bill was, I'm questioning. I'm like, oh, there's an extra. No, that's not supposed to be like that.
Chuck's going to be doing his remote show via candlelight.
Yeah, I mean, golly gee willikers. But so anyways, energy prices, yes, you can exclude them from core inflation because they're not predictive, but they still do have a pass-through into some of those areas just because of how psychology works and how, different areas are still impacted by those energy prices. Either way, it looks like we're heading to 0.25% in February and 0.25% in March, and then we've got a pause that is priced in.
Which would bring us, we're at 4 to 425, or we're at 425 to 450 right now?
The latter. So this would take us to 4.75 to 5%
Yep.
on your short-term Fed funds futures rate.
Which I think most members of the Fed would consider to be restrictive policy.
The question is going to be if we get an additional flare-up in inflation because China's reopening and there's all kinds of demand for this and that and everything. Does that happen? Hey, Europe doesn't have energy prices as high as people were predicting, and so there's extra money to spend. Do you see a rebound in demand from there and economic activity coming back from that? So these are the things that you do watch for. And again, I think there's a wide range of outcomes this year. There's one scenario where you do have the hard landing recession. There's one where you have this hard go-around and inflation rebounds. And there's the Goldilocks scenario, which is still my least likely out of the three.
Yep.
But you do have to admit that the data has gotten better in the last 6 months, even though the soft landing is still very much in question.
Agreed.
We're going to take a quick break, but hour 2 of the Financial Exchange is up in just a little bit, so make sure you stick around for that.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned, and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, LegalExchangeShow.com. Once again, simply call 866-848-5699, or get it from their website at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
It's easy to imagine a move to a warmer climate for just a few months each year, but you need to have a sound financial plan in place if it's going to work. If you're thinking of buying a new place in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, having a solid solid financial strategy is necessary. When it comes to snowbirding, there are a lot of moving parts. In this month's new guide, titled Can You Afford to Snowbird, we'll walk you through ways to make sure you understand how to build a strong plan that can take you away from the cold. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Can You Afford to Snowbird? Mike, the first decision that someone needs to make if they're trying to figure out if they should move to a second place is whether or not they should be buying or renting. How do they make that decision?
Yeah, it is probably the first one once you get past the idea that you want to get out of the Northeast in the middle of winter, in the middle of January. Once you've come to that conclusion, that's the next logical step. It comes down to a number of different factors, but the tough part about buying is that there's a lot of permanence associated with it. Not that you can't reverse that decision, but if it's your first time going and trying out a new space, oftentimes renting can be the more appealing decision there when it comes to spending some time outside of your primary residence. Obviously, you're not worried about the maintenance costs and everything else associated with it. All of that having been said, there is something to owning a piece of property, knowing that it's yours and knowing that you'll be able to return to the same place over and over again. You might have the best relationship in the world with the person who is renting you their home for those 3 months a year, but when push comes to shove, if that person needs to sell that property and move on to a different tenant, they're going to do so. So it requires some thinking and real consideration, especially if this is your first time making the consideration to snowbird.
Our guide this month is titled Can You Afford to Snowbird? And there are two ways that you can request it. First, you can call 800-393-4001. Second option, you can go and download it at armstrongadvisory.com. Either way, it doesn't cost you anything. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
As we're a little bit more than halfway through the morning trading session, we continue to see stocks in a sell-off. Nothing huge, but a continuation of the move downward that started yesterday. The Dow's off another 262 points. It's actually going to be the third straight down day for the Dow if it closes in negative territory. Remember, on Tuesday, they had their move down that was led by Goldman Sachs puking about 6%. We got the S&P off about 37 points, or a little less than 1%, and the NASDAQ down 131, or about 1.25%. 10-year U.S. Treasury is up 3 basis points to 3.4%. Oil, West Texas Intermediate, up 71 cents to 80.19, back above 80 a barrel after spending a day below. Gold is up 12.40 an ounce to 19.19, and that's what we have going on in your major markets. I want to talk a little bit about middle-class America and the inflation pinch that they have been feeling. Now, whenever we talk about middle class, we first have to define middle class because, interestingly, when you poll Americans, basically everyone wants to say they're middle class.
I only make $1 million a year. I'm not
Honestly,
Jeff Bezos.
No, like you have the people that are like, well, you know, we can afford to buy a home and we can go out to dinner whenever we want, but it's not like we do anything lavish. It's like, no, you're not middle class if that's the case. Okay, that's not how it works. Here's how the Pew Research Center defines middle class. And I think this is a decent attempt, but it still is flawed in my opinion.
Okay.
They say that it's those earning between 2/3 and twice the median American household income. Okay, so in 2021, the median American household income, meaning the 50th percentile, equal number making less or more than you, was $70,784. 2/3 of that is $47,189. Double that is $141,568. So basically, to make the math easy, between $50,000 and $140,000 is how Pew defines middle class in America.
Okay.
Decent bit. I think the high end might be a little high.
Yeah, I mean,
and here's why I say that. So the median income for Americans was $70,000, but the median income for the middle class they're saying is $90,000.
right. You would think that
Something skewed high a little bit.
middle income would be a certain percentile around the median.
Yeah, so I would maybe say, okay, from 2/3 to 1.5 times, because then you're doing, 2/3 on the bottom and 3/2 on the top, so that like the math looks nice also. But, okay, so that gets you to like $120,000 on the upside, okay? Fine. So here's what we're seeing, is that, interestingly, and this is how it always is, those are the households that get squeezed most, basically always, okay? Because you make enough that you have to pay taxes usually in those, income brackets and everything. You typically don't receive much in the way of assistance for things like college and financial aid and things along those lines if you wanted to do
Food
it.
programs, energy assistance programs, you generally income out of.
Correct. So you're right in the middle of the spot where it's like, I'm not really getting much help, but I also am not making like $1 million a year and I'm able to do whatever I want, or even, $250,000 and have more flexibility and things like that. So when you see inflation happening, obviously this is a group that typically is feeling a little bit more squeezed in general in a lot of cases. But the inflationary burden also tends to hit them because this is a group that, by and large, can afford to buy cars, but gas price increases are a bigger change in their income than for someone who's making more than they are.
Sure.
If you're only making $10,000 a year, you probably can't afford to buy a car, so the gas prices going up, they don't affect you, okay? But when you're in this group and you're making, $70,000, $80,000, $90,000 a year as a household, it's really bad that now filling up my oil tank for the winter, for the first half of the winter, costs so much. It's really tough that my electric bill is 80% higher than it was last year. These things hurt this group more than just about anyone else.
I guess my question is, do we think there's an income spectrum where inflation hits the absolute hardest?
Hardest?
Or has hit the absolute hardest? Like, can you honestly say that middle-income Americans are better off than lower-income Americans due to inflation on a net basis? I have a tough time going down that road.
Are better off or worse off?
Worse off, sorry, yeah.
I think there's an income cutoff where so much of your income comes from assistance programs that by and large inflation doesn't affect you the same way.
It's also, I suppose, fair to say that the largest wage
But that's
increases,
a really low income I'm talking. Like,
yeah.
I'm talking like 10,000 and under.
Yeah.
Like you've got to be making very, very little. Because otherwise, for someone who's making, $20,000 a year, $25,000 a year, it's tough to say that someone making 50 is feeling more pain than them.
And here's where I continue to struggle. So regardless of where we say who is most hurt by high inflation, I think it's probably still folks that are still working, not on Social Security, because Social Security is at least getting wage and inflation increases that are pretty in line with inflation, whereas wages aren't quite there. Okay. I think it's generally speaking, lower income workers and families are getting hurt hardest from inflation.
I would agree.
The Harvard study that we outlined earlier specifically pointed to the lack of workers from that low income workforce making up the 2.5 million people that just aren't there. And
if they're retirees, it makes sense.
I guess so, right? If they've started collecting Social Security now, they were working till 70, and they've just said, okay, I'm done working a few days a week, then they've jumped in there.
Otherwise, it's very confusing.
Otherwise, it's very confusing, right? Because you would think that if the demographic that is being hurt the hardest by inflation isn't working, I just don't get it.
Yeah.
The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they're the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands, because with perfect weather and in year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean, so head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean Paradise. Visit usvi.com. That's visitusvi.com.
I want to talk about electricity prices in the Northeast now. We were talking about inflation, and this is just an area where, again, it doesn't really get captured by the national level data, just how bad the price increases are hitting families in the Northeast this year.
Yeah.
So the Boston Globe has a piece on this today, and they're citing someone who lives in Quincy now. And basically what happened is last year for their December bill, their electric bill was $218.50. Okay. again, electricity is always expensive in New England, especially in the winter, yada, yada. We get it.
Sure.
This year, even though his electricity usage was up by just 17%, his December bill was $378.16, almost double what his bill was last December. And it's all because, again, like we've talked about this at length, National Grid, they raised their prices by effectively 64% for Massachusetts residents this year. Eversource filed an increase for the first half of this year. It's going to be a 40% increase. So, you've got some just huge increases that we're seeing here. And honestly, this should be the kind of stuff that starts to get projects moving to lower these costs. I have heard crickets in terms of any new development for pipelines, power lines, anything that would potentially alleviate this. There's been nothing in the last 2 months. And I Google this almost every day just to see, New England, electricity generation projects, New England natural gas, pipeline projects. No one's even talking about doing anything. It's like everyone just has their head buried in the sand. And every politician's like, well, maybe it'll just go away if we wait long enough.
There is no conversation whatsoever about this.
No one's
You're
talking
absolutely
about
right.
this. And I don't know why. It doesn't have to be this way. And, again, I'm not the this guy from Quincy is not the only one who's experiencing this. I got my bills from National Grid the last 2 days. I got my gas bill and then I got my electric bill. And I looked at it and I go, that's not sustainable.
No,
I can't do that. Like, that's not going to work.
A couple of things. One, this is not exclusively a New England thing, although it is certainly exacerbated
The scale
here
of it
in the
is.
Northeast.
Yeah.
Certainly exacerbated here on the Northeast. And a lot of it has to do with global impacts to energy prices, but a fair bit of it has to do with stupid energy policy. It has to do with the fact that we pack a bunch of nat gas onto a ship, we freeze it, and then we send it around the East Coast to ship it into Boston instead of just bringing it in via pipeline.
Yeah, it's just not good. And I talk about this a lot, but, and again, the data that I have is out of date now just because they don't update it until November each year. Mm-hmm. But for 2021, Massachusetts residents, and this is just for the generation piece of the electric bill, which, remember, is basically half of it. Mass residents were paying $19.06 cents per kilowatt hour. Okay, the national average was 11 cents, 11.1 cents. So Massachusetts was almost double the national average. You go through the rest of New England, it's the same story. Vermont, 1634, about 50% higher than the national average. Rhode Island, 1844, about 70% higher than the national average. New Hampshire, 1737, 60% higher than the national average. Maine, 1396, about 25% higher than the national average. Connecticut, 1832, about 70% higher than the national average. Mike, in 2021, there were 2 states that had higher electric prices than Massachusetts. They were Hawaii and Alaska. I'm sorry, 3. California was at 1965. Great state to be compared to for electric prices. Wonderful. The state that tells people not to plug in their electric cars that they're mandating by 2035, that's the state that you're being comped with in terms of your electric prices.
Right.
I mean, what are we doing here, man? This is not a hard problem to solve, okay?
Well, hold on.
It's not.
It's not a complicated problem to solve. It is a difficult problem to solve, clearly.
No, it's not. It's a problem that just requires a little bit of willpower. It's not hard. We've built pipelines before.
Yep.
Okay? It's not hard to do.
All right, go convince everybody in New Hampshire that they need to allow for the high power transit lines for power from Quebec. I know it's not complicated.
Mike, they were going to bury them. They were going to be underground, and they said no.
I hear you.
Western Mass, same thing. Oh, gee, we want nat gas pipelines coming through. Nope, sorry.
Yeah. Again, it's stupid, but it's clearly not simple.
This is why your electric bill is up 65% this year. Yeah. This is why you have consistently the highest electric prices in the country, is because everyone's a NIMBY, not in my backyard.
Yep.
Put the thing in my backyard. I don't care. Fine.
Just lower my electricity costs.
Put it there and then I'll move. I don't care. That's fine.
Yeah.
But you got to do something on this. Let's take a quick break. When we come back, let's talk about China and their property bubble.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network. You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Watch the show every day on Twitch TV, Facebook, and our website, FinancialExchangeShow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
So, in 2021, China commenced the popping of its property bubble. Like a pimple. Just squeeze it and it'll pop. Now, that was one of their goals, was basically, look, we've over-leveraged on property. we want to get back to something that's a little bit more sustainable. And, maybe there's a little bit of a political thing inside China as well, and that some of the people that we don't like within the Chinese Communist Party are big investors in property, and we can, weed some of them out so that Xi can continue to consolidate power.
Yeah,
it's a pretty common theme of him using the business world to consolidate his power.
Yeah, so, look, there's multiple pieces here, but I think in the context of how much housing has expanded in China, how much money has gone into housing, and in the context of the fact that their population shrunk in 2022, there's a number of different reasons that it made sense to deleverage the housing sector at this point in time. And I think there might be a compelling argument that there's a large oversupply of housing when it comes to China at the moment if they are continuing on the trend from last year.
So one of the things that I do find a little bit perplexing when we look at some of the themes that have kicked off the first few weeks of this year is the fact that, hey, we've talked about this idea of China reopening. And largely, I have viewed that through the lens of the Chinese individual and family is going to begin spending again outside their household in a way that they have not over the past couple of years, last year in particular.
Right.
For some reason, that's been interpreted, this idea of the China reopening has been interpreted by commodity markets as China's going to start building crap again. And you've got, copper flying through the roof. You got steel flying through the roof. And I'm sitting there and I'm like, that doesn't really fit with what I would expect, because to this point, China, yes, while there's some things around the edges where they're talking about some new development and some investment on a regional level, you're not seeing the broad-based type of investment in real estate that you have previously. And so I feel like things might be a little bit overextended in parts of that, just because I'm not buying the idea of China starting to immediately build a bunch of condos again, a year and a half after they decided that was a bad idea.
Yeah, I guess I'm not necessarily either, but I do think we have to acknowledge that basically came down to zero over the last 2 years.
Yeah.
Last 3 years in China, really. I mean, we're talking about since December of 2019. And so I don't think it's returning to 2019 levels, but I mean, look, the party clearly has changed their tune on a number of items. Certainly their attitude towards tech companies. They are now investors in a lot of those big tech companies. I think we can argue why they're investing in those tech companies, but they are. They also have really changed their tune, I think, when it comes to the 3 red line policy, when it comes to the bubble that was Chinese housing market. I think they've changed their tune a fair bit there.
So we'll see what ends up happening on that front. But, again, the Chinese property sector, still dodgy, but maybe we get some changes in terms of top-down mandates, and you get a little bit of a recovery there this year. Wall Street, they are trying to rein in costs because, again, it's very weird right now in that you've got all these banks. Even Brian Moynihan's out this morning saying, hey, the base case for this year is a mild recession. And yet they're all giving their employees raises because
they feel they have to.
They're nervous about losing employees, which is not normally something that you say heading into what you believe to be a mild recession.
It's just the complete opposite of what these banks dealt with at the last real recession of 2008, where it was cut as deeply as you possibly could because it was a really problematic market, and hey, it's not going to be a problem competing with labor right now. And right now, I think it's very possible you have a recession without significant job loss, and companies don't really know how to deal with that.
Oh, see, again, we've never seen a recession without job loss in the U.S.
I say significant because I don't think you can really have a recession without any job loss. It just...
You're buying the soft landing.
No, not at all. But,
Soft fish?
I think I would still define something as a recession if activity slowed down and unemployment went to 5% unemployment.
I mean, that would be a significant recession to get a 1.5% increase in unemployment. That's a significant recession to get there.
Yeah.
I think that everyone continues to be way too sanguine about this. Is that sanguine?
I think sanguine.
I blew it. Quick
Sangria.
break. We're back with Sangria after this.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network. You've worked hard to achieve wealth and prosperity. Don't let an unexpected nursing home stay take it all away. According to Genworth, the average monthly cost for a private room in New England could increase by up to 25% by 2030. If you or a loved one might need nursing home care in the near future, and you're not prepared to handle these kinds of costs, you need to call the experts at Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets that you've worked a lifetime to attain. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, LegalExchangeShow.com. Once again, simply call 866-848-5699, or get it from their website at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. Coming up on February 19th, American Idol will begin their 21st season. The success of Season 1 of American Idol is the reason why it seems every network now airs their own dumb singing competition now, so... there you go. So our question today, who won Season 1 of American Idol? Nice and easy question for you guys out there today.
Very easy.
Be the sixth person to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll give away the Encore gift card on tomorrow's show. Once again, 617-362-1385, and the sixth correct response will be our winner. See the complete contest rules at financialexchangeshow.com. Go.
Oh, it's my turn?
Yeah.
We just both looked at each other.
I don't know. I've been talking a lot. I just kind of wanted to
And
defer
you're on.
for a little bit. What do you, Mike, we spiked that story, just so you know.
Nobody told me.
I know. You weren't here. Let's talk. What do you got?
Pretty sure I did tell you that.
Oh, actually, you might have. This might
Yeah.
have been the second time this
Second
week
time
that you
this
weren't
week
listening to
where-
Tucker about the schedule.
When he's not listening.
Accurate.
Very possible.
Accurate.
Very possible. Let's talk a little bit about tax season. We're heading into it now, and there aren't enough accountants, Mike. This is a problem.
It actually is a genuine problem, and if this is the first you're hearing about it, go talk to anybody that works in the accounting world right now, because there's nobody that apparently wants to do that job.
There's a tax firm in Nutley, New Jersey, that hired a 10-person tax team from India because they couldn't find enough U.S. accountants. Now, here's the thing. It's really, really hard to become a CPA.
It is.
Okay, now granted, that's a high-level qualification. We're not talking about, enrolled agents or EAs as they're referred to. But, A, it's really hard to become a CPA. B, once you are a CPA, I think that your life is generally very difficult. Your business life. There are deadlines all year. It's not just April 15th, okay? Again, because there aren't enough accountants, you are overwhelmed with the amount of work, and it's really hard to say no to it.
Yep.
Okay. And you also deal with the fact that, hey, if you are, good at what you do and you have a growing business, it's hard to find other employees then to continue to grow your business. So it's a really challenging business. It's also a highly profitable one because there are so few accountants that, hey, you can charge good prices.
Yeah, I mean, if you think about the role itself, right? I mean, the work itself is a lot of number crunching, which is not for everyone. I get why that's not for necessarily everyone.
Most accountants
a lot of
don't
people
even crunch the numbers themselves,
right.
though.
It's a lot of
They're programs
plugging
that they,
and programming
yeah,
and that
exactly.
sort of thing. I don't know that it's a career that you look at and say, oh, I feel like if your goal is to find a career where you are, I don't know.
Sexy.
Inspired, sexy, that type of thing. It's not exactly Google per se.
But I'll ask this. Is there any field in the United States with more job security than being a good accountant?
Maybe coding. Yeah, there's very few. Computer programming, coding, accounting right now are probably the most job secure types of things you can do. And
I would say accounting is more secure than even on the coding side of
I mean,
things.
just due to the lack of supply, it's easier. It's faster, let's say, to get a coding degree than it would be to go get a CPA right now. So there is a backlog there. The compensation numbers are crazy, but again, quality of life standpoint, right? No, it's not like this all year round. But for a portion of it, you're working 80 hours a week, and there's not much you can do about it.
Yeah, if you're someone who doesn't want to be in the limelight, and you just want to, sit there and do your work, and you like just, doing, if you're someone who enjoys methodical work, it's a fantastic industry for you. It really is, because is there anything more certain in the world than the fact that the U.S. tax code is always going to be complicated enough to require some level of accountants in the country?
Oh, and then there's the other detractor to the job. You have to deal directly with the IRS. I can't imagine a government agency more frustrating to deal with right now than the IRS. Not because they're a bunch of jerks, because they are so woefully underfunded that they're still using technology from the 1960s.
Well, again, they still have
job.
returns from like 2 years ago that they haven't processed.
Just sitting in kitchenettes, unaware of what to do with.
They don't know where they are. Like they're in the IRS facilities, but they don't know where.
The other thing that I had heard about this industry right now that was just mind-blowing to me was the fact that there are a lot of acquisitions occurring in this industry right now for obvious reasons. We're looking for talent, and just not enough new accountants coming in. The way that deals are getting structured right now, at least some of the deals that I've heard about that are getting structured right now, are less dependent on how many. For instance, you're two CPAs that do tax returns, and you're buying the other firm. You would think, hey, I should tie my acquisition cost to the revenue and how many clients we retain of this acquisition. They're actually being tied to how many of the CPAs you retain during the transition. So I'm buying this firm. I don't care how many clients walk out the door because I can't deal with the number of clients I already have.
And I'll find more.
And I'll find more because everybody needs a tax preparer. But if I lose a single one of those CPAs, I'm screwed. So that's what I'm buying right now. I'm not buying the clients. I'm buying the CPAs.
Folks, the Armstrong Advisory Group has a guide available this month. It's titled, Can You Afford to Snowbird? Take a look at the Doppler. There's a storm coming in tonight.
Yeah.
It's going to be, depending on where you are in New England, there's going to be some rain in southern New England, the dreaded wintry mix
heavy
through
snow.
A big chunk, and then some heavy snow coming in.
Not to mention that dew point.
What's the dew point going to be, Tuck?
Thought you knew.
Tuck, I don't pay attention to dew points in the winter when it's cold.
You
Not
never know.
important.
Never know.
Not
It's a
important.
warm winter.
Not important.
A lot of dew.
A lot of dew. So, if you don't like the dew, you don't like the snow, and most of all, you don't like the wintry mix, this is the guide for you to figure out, hey, can I afford to rent a place down in the Carolinas, to buy a place down in Arizona, to rent a place down in Texas, and maybe get out of New England, not all the time, but just for a few months a year, depending on your situation. What kinds of things do you have to consider? Cost of living, taxes, all kinds, state taxes, property taxes, vehicle taxes, all these things. How do you build a plan to get out of New England for a few months a year? This is the guide that will help you formulate those ideas. It's titled, Can You Afford to Snowbird? And there are two ways you can request it. First, you can call 800-393-4001. That's 800-393-4001. Second option, you can go to armstrongadvisory.com, click the monthly guide button, and then you can request it there. Again, that number is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. Fake meat. When's the last time either of you ate it? And by fake meat, I mean basically Beyond Meat or Impossible Meat.
2020?
Yeah, I can't honestly recall.
Probably 3 years ago. I tried the sausages.
Yep.
They were fine. They were more expensive than other sausage. I have not gone back. And this is the problem. And this is kind of what we had said at the time, in that, A, these are food companies, and B, there are so many food fads that happen. And this felt like one at the time, and now it's turning out to be one because sequentially, year over year, you've got sales that are declining for plant-based meats.
I wouldn't have ever thought that the similarities between Impossible Foods, Beyond Meat, and Peloton would be so significant. But gosh, there sure are a lot of draws that you can put here, and I think in both cases, it's probably fair to say that the leadership of these companies saw a fad, thought it was a long-term trend, and built their businesses upon that.
And here's the worst part, actually, is that when these companies were dramatically overvalued, the founders did nothing to raise additional capital to actually build the runway needed to make them into sustainable businesses for the long run. Instead, they were like, no, we can't raise capital now. Guys, the best time to raise capital is when you have a significantly overvalued stock.
Yeah.
Everyone, I get it that it's, unseemly to be like, oh, this is the time we need to raise, but no, that's when you do it.
Yeah, when everyone's willing to give you the money,
it's a
take
lot
advantage
easier
of that.
to raise $1 billion when your company's valued at $4 billion than when it's valued at $2 billion. And so, again, the problem is twofold. Demand is falling. It's not cratering. It's just, declining 10% year over year. So I guess it's not good. Okay. And again, as I've said for a long time on this stuff, just because something is plant-based doesn't mean it's good for you. Potato chips are plant-based. Has anyone ever gone on the potato chip diet? Because I have. Put on a lot of weight.
Didn't go well for you?
Put on a lot of weight. Okay? So just because it comes from plants doesn't mean it's good for you. All right? I mean, it's really pretty simple here. So I think that this has clearly been revealed to be a fad. The health science is dubious as to whether or not these things are actually good for you to eat. And they're also way more expensive, and at a time when people are concerned about pricing.
And I think people thought there was some sort of moat here, and it's pretty clear to me that this is not some crazy technological innovation that nobody else can recreate.
It's ground-up pea protein. The plant.
So I don't think that this is going away. I think there's probably going to be new entrants into it, in fact, because there are some people that are going to continue to buy it, but it's a small segment of the food business, not a revolutionary new way to cut back on meat production.
Well, and here's the problem. The target market for this is non-existent because you talk to vegetarians, and many of them don't want something that tastes like meat because they don't like the taste and texture of meat, which may be why some of them decide to become vegetarians. The people who are meat eaters are like, no, give me the meat. This doesn't taste as good. So who are you trying to fool on this? And it just hasn't worked. So, yeah, that's the deal with fake meat these days. Let's take a quick break. When we come back, Stack Roulette.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is The Financial Exchange Radio Network. The United States Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place for your next vacation. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands. Because with perfect weather and year-round temperatures of 75 degrees, relaxation is at its finest. Enjoy their spectacular beaches, world-famous cuisine, golf, tennis, and a wide variety of water sports. The U.S. Virgin Islands is one of the most popular vacation spots in the Caribbean. So head to visitusvi.com and explore their wide variety of travel packages today. There's no money to exchange, no passport required, and best of all, no more domestic travel restrictions to enter. Paradise awaits you. Go to visitusvi.com for more information and to book your trip today. Come to America's Caribbean paradise. Visit usvi.com. That's visitusvi.com.
If you're thinking of becoming a snowbird, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you are getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses if you're trying to determine whether there's room in your budget to snowbird and remain as financially comfortable as possible. Even while you're snowbirding, you can't forget your permanent home because your overall costs can add up and you might find yourself in a difficult position when it comes to your expenses. If you'd like a copy of our brand new guide called Can You Afford to Snowbird, you can call us right now at 800-393-4001. Again, the name of the guide is Can You Afford to Snowbird, and it's available at 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. services. An extended nursing home stay could deplete your savings in months if you're not prepared. According to Genworth, New England residents could see yearly costs of more than $200,000 by 2030. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. They're experts in estate planning and asset protection, which is critical if you want to enjoy your retirement years. Get their new free guide called Long-Term Care Planning for Procrastinators. Learn about the steps you need to take to protect yourself, your family, and your assets from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John are the perfect place for your next vacation. Enjoy first-class resorts, exquisite cuisine, perfect temperatures all year round, and fall naturally in rhythm with the heartbeat of the islands. No passport is needed, and there are no more domestic travel requirements to enter. Come to America's Caribbean Paradise. Go to visitusvi.com to book your trip. That's visitusvi.com. Well, the trivia question was, who was the season 1 winner of American Idol? And that would, of course, be...
Kelly Clarkson!
Yes, Kelly Clarkson. Clarkson has gone on to sell over 25 million albums worldwide and sold over 45 million singles. And our winner today was Naj from Dorchester, Mass, the Dot. And he's taking home the Financial Exchange Show T-shirt, and he's also registered to win a $100 gift card to Encore Boston Harbor, which we'll be giving away on Friday's show. And trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Apple is bringing back the high-priced Apple HomePod. Now, they have these HomePod minis that are $99, but they're bringing back the $300 HomePod, and I don't know why.
Did they ever discontinue it?
Yes.
They did, so they just stopped it.
They just made the minis.
All right, so I don't know why either, especially since Amazon and Google haven't moved their prices, but both of those companies are cutting headcount in those divisions because they've realized they make no money.
But they still sell their devices.
They do. Maybe they're going to jack prices up. Maybe they're anticipating that. I don't know. I don't know why it would have failed last time and is now going to work this time.
I don't get it. That's all I got.
Party City is filing for Chapter 11 bankruptcy.
Party's over.
I have to tell you, having been to several Party Cities for kids' birthday parties and things along those lines, we actually frequent Party City. This is not terribly surprising.
No, it's. I don't think it's a store that can exist today.
So I actually went in mid-December, like something like that, like 4 o'clock on a Thursday. I was the only one in there.
I'll tell
Why
you
do you think it can't exist today? I actually think
not enough parties.
This is.
I am
this
not
is
so
all stuff you can buy on Amazon.
No. No, I mean, the main reason we go there is for the giant inflated Mylar balloons.
I'll tell you this. My wife loves birthday parties more than anyone in the
Yeah.
world. She has never had to go anywhere other than Amazon
To buy all that
to
stuff.
buy all the stuff that's necessary to decorate for
Yeah, we usually
birthday parties.
get it from Amazon too.
And again, this is not, I'm not talking like, hey, here's a balloon or here. I'm talking, okay, everything's coordinated. Like, she goes all out on
I would
this
miss
stuff.
Party City if it went out of business. But I agree. The only thing that I can't get at Amazon are the inflated Mylar balloons.
Now, here's the thing. They are trying to go through Chapter 11 in terms of just trying to restructure. So they're not trying to do a liquidation here.
No, they are not.
So they do believe that they can get to a point where they can continue to exist.
It
So-
wouldn't be surprising, though, if they did cease to exist in the near future.
No, it wouldn't. Now, what they have done, they've closed 28 stores so far. They still have... Does it say how many stores they still have?
I think it must be in the high hundreds.
They had 823 at their peak. I don't know how many they have now. So there's probably some more closures coming, but again, I guess the good news, if you want to look for it, is that you're not all employees are necessarily being laid off on this. Okay, again, it's not a liquidation, but it remains to be seen how many locations do remain out there at this point.
I don't feel I've got a great source on this, but yeah, I'm seeing numbers somewhere in the 750 to 800 peak number that you had quoted.
Amazon made a very sneaky move to their base Amazon Music subscription. They, without telling customers, changed it from one where you could listen to all of the songs that were apparently available to you in whatever order you chose into more of a streaming radio platform where you now have more songs available, but you can't select all of the ones that you want at the time you want unless you pay for the Amazon Music Unlimited subscription.
Which, again, we've been hearing about how this business model doesn't make sense for the artists or anybody else for a while now. I don't know, like everything seems to be, coalescing in 2023 for companies to realize
It's
that.
kind of a sneaky move by Amazon.
Oh,
to
it's a
not
totally
tell anyone
sneaky
about
move by
this.
Amazon. But they shouldn't have been offering it in the first place.
So, yeah, this is something that, honestly, Jeff Bezos would not have done because I think he would have understood the customer better.
Think so?
This is not a great move from Andy Jassy here. We're going to take a quick break for the rest of the day. Back at it tomorrow on the Financial Exchange.